Breaking economic news. Major banks just shocked analysts by dramatically raising Vietnam's growth forecasts. While global markets struggle, Vietnam is defying all expectations. But what do they know that others don't? In a stunning reversal that has investors scrambling, Maybank has just increased Vietnam's 2025 growth projection by more than a full percentage point. UOB and Citi quickly followed with their own upward revisions. Is Vietnam about to become Asia's new economic tiger? As global economies brace for slowdown, Vietnam's secret economic weapon has major financial institutions racing to update their forecasts. In the next over 7 minutes, we'll reveal what these banks discovered that's causing this dramatic shift and the surprising factors that could push Vietnam's growth even higher than predicted. The numbers are shocking, even seasoned economists. But before we reveal what's behind this economic surprise, you need to understand what's really happening in Vietnam right now. Section 1. Forecast revisions by major banks. 3 major financial institutions have recently revised their Vietnam growth forecasts upward. United Overseas Bank, or UOB, has increased its projection to 7% from the previous 6.6%. This revision, announced in January 2025, reflects UOB's confidence in Vietnam's economic momentum carrying forward from 2024. Citi has also adjusted its outlook, now forecasting Vietnam's GDP growth in the 6 to 7% range for 2025, up from their previous 6.6% projection. Their analysts point to continued manufacturing expansion, recovery in the real estate sector, and ongoing structural reforms as key drivers. Perhaps most optimistic is Maybank, which has significantly raised its forecast from 6.2% to 7.3%. Their foresight lens. May 2025 report highlights Vietnam's exceptional economic performance, with Q2 2025's GDP growth potentially reaching as high as 7.4%. These upward revisions stand in contrast to earlier, more conservative outlooks, reflecting growing confidence in Vietnam's economic trajectory despite global headwinds. Section 2. Economic context and growth drivers. Vietnam's economy demonstrated remarkable resilience in 2024, achieving a GDP growth rate of 7.09%. This strong performance has set a solid foundation for continued growth in 2025. Prime Minister Pham Minh Chinh has set an ambitious growth target of at least 8% for 2025, though the National Assembly has established a more conservative range of 6.5 to 7%. UOB experts note that while the 8% goal is ambitious, there are still feasible merits to support such a target. Vietnam's export sector has been a significant growth driver, with the country achieving record-high exports of more than $400 billion in 2024. The manufacturing sector continues to expand, attracting substantial foreign direct investment. Another key factor is the real estate recovery. Citi analysts believe this sector will gain significant traction in 2025, reducing systemic risks in the financial system and putting domestic consumption on a more stable footing. Section 3. Countervailing tax issues and foreign investment. Despite facing challenges like the U.S. countervailing duty tax of 46% on goods exported from Vietnam, the country maintains relative advantages that continue to attract foreign investors. In early 2025, FDI inflows to Vietnam rose an impressive 35.5% to over 6.9 billion United States dollars, with the manufacturing sector leading at 4.72 billion United States dollars. This strong performance indicates that Vietnam remains an attractive destination for international investors despite global trade tensions. The Vietnamese government has also introduced policies to accelerate investment project approvals, such as Decree 19/2025 NDC, effective from February 10, 2025. This decree aims to streamline processes for foreign investors, further enhancing Vietnam's appeal as an investment destination. Section 4. Monetary policy outlook. On the monetary policy front, UOB predicts that the State Bank of Vietnam may reduce interest rates by 0.25% in the third quarter of 2025. This move would align with potential Federal Reserve interest rate cuts, helping to reduce exchange rate pressure on the Vietnamese dong. The central bank has already shown willingness to adjust rates to support economic growth. In February 2025, it cut the interest rate on bills by 0.1 percentage point, from 4% to 3.9%. More recently, in June 2025, the SBV reduced key interest rates by 0.25% to 0.5%, stimulating economic activity. This potential rate cut would align with a global trend of monetary easing. In Australia, for example, the Reserve Bank has already implemented interest rate cuts in 2025, with a 0.25 percentage point reduction in May, and expectations of further cuts throughout the year. Section 5. Comparative analysis of growth forecasts. Looking at the broader picture, various financial institutions and international organizations have provided differing growth forecasts for Vietnam's economy in 2025. Citi projects 7%, up from 6.6%. Maybank forecasts 7.3%, up from 6.2%. UOB predicts 7%, up from 6.6%. The World Bank estimates 6.8%. The Asian Development Bank projects between 6.2% and 6.6%. The IMF forecasts 6.1%. Standard Chartered Bank expects 6.7%. HSBC predicts 6.5%, and the OECD estimates 6.2%. This range of forecasts, while varying in specifics, demonstrates a general consensus that Vietnam's economy will continue to grow robustly in 2025, with most projections falling within the 6 to 7% range. Conclusion: the upward revisions of Vietnam's 2025 GDP growth forecast reflect growing confidence in the country's economic resilience and growth potential. Despite global trade tensions and countervailing tax issues, Vietnam continues to attract significant foreign direct investment and maintain robust export growth. The potential interest rate reduction by the State Bank of Vietnam in Q3 2025, aligned with expected Fed rate cuts, would further support economic growth by reducing borrowing costs while managing exchange rate pressures. While the Vietnamese government's ambitious 8% growth target for 2025 may be challenging to achieve, the consensus among financial institutions suggests that Vietnam is well positioned to maintain strong economic performance in the 6.5 to 7.3% range, outpacing many regional competitors and reinforcing its status as one of Asia's fastest-growing economies. Thank you for watching our analysis of Vietnam's 2025 GDP growth forecast updates. If you found this analysis valuable, take action now. Click the subscribe button and hit the notification bell to stay updated too. Date on Economic Report with detailed sector analysis and investment opportunities. Thank you, and see you in the next videos.